Okay, we're recording this video on Sunday, the 26th of February 2017. Hope you had a good week's trading. Hope you're enjoying your weekend. So, recording this from Japan. We're in Niseko, or Niseko, which is a fantastic place for skiing and snowboarding. It's on the northern island of Hokkaido. We've been here a few times before, but we decided to come this year flying from Hawaii. So because of all the Japanese tourists that come from Japan to Hawaii, there are a lot of kind of good flights, regular flights from Hawaii to Japan. So we were able to get a direct flight from Honolulu to Sapporo, which is kind of the largest international airport kind of close to this ski resort. Normally, if we were coming from Australia, we'd come via Tokyo, and then we'd have to do an overnight stopover and then do a domestic flight the next day. So it's a little bit more convenient from Hawaii, believe it or not. Anyway, so taking a few weeks off from surfing and doing some snowboarding instead. And lucky for us, the snow has just arrived as we arrived. So we've had 3 days of beautiful kind of non-stop powder coming down, which is just excellent. So let us talk about some charts. I want to go through Friday's chart just briefly, because it was kind of an odd, squirrely kind of day. Going to go through the long-term E-mini chart and look at that kind of relative to what the bond market is doing, and then to go through just quickly crude charts, gold, silver, and platinum. So let's talk about Friday's chart. I was expecting a little bit of a sell-off. This is the 1500 tip bar chart, and there was the sell-off that we had. It was kind of overnight into the open on Friday. And normally with sell-offs, what you expect to see is exhaustion selling on the downside. That kind of bottoms the market, and then we can kind of rally from there. But you see all of the volume exhaustion patterns during Friday's trade. We had them around a data release here at about 9 o'clock here. Then we had flush patterns, and then we had another exhaustion buy, setting us off into this kind of rally in the last hour of the day. Nothing on the downside, no exhaustion patterns on the downside, and it just looks just like a weirdo kind of pushed up market. I put out a post a couple of days ago saying we are due, when you look at the long-term charts, for a little bit of a downside move or a consolidation move or whatever. But this overnight activity, no one was willing to kind of push it down and get to exhaustions. And I must admit, there's been days like this, in previous months and years, where it just feels manufactured. It feels like someone's coming in to hold it and just push it up. And you can see here on each of these dips. So here we had a little dip at a pullback to end of trend. Blue professional bars kind of come in. They come in on this dip. They're coming on this dip, they're coming on this dip like a U-turn here, not here, but then this setup kind of blasting off to a little bit of a trendy move to the upside. Not particularly on the upsides. We had some here because that was around a data release, but there wasn't anything here or here. There were amateur Rambo patterns, a couple here, but they're just buying the dips and just forcing it up and up. It was a very tight range until we had that last kind of blow-off activity into the close. But it just looks, I wasn't trading it because I'd been done my trading about here just after 9 o'clock, because for me the trading day now starts at 11:30 p.m. so it's pretty hard. I'm exhausted at that time. So after I've got my trade in, I'm off to bed, so I wasn't kind of watching this. But at the end of the day, when you kind of look at it, it just looks kind of funky, and that we didn't have an exhaustion sell pattern on the downside is unusual. Just felt manufactured, kind of gamed up a little bit during the day. So for me, the best trade was this little long trade. Got in long 53 even, out at 57 on this activity. It was here on this move here, which was actually, there was a pullback to end of trend on the lowest time frame on this left shoulder here. Then we had this pullback to intermediate on the 1500 tip bar chart. A little U-turn with blue fractional bars holding it there. And then we went for a little runaway move into this data release. Just show you that on the system view. So this is the open of the day, and there's that little pullback to end of trend on the lowest time frame. Then we go intermediate time frame. Then we go for a little bit of strength. We got to put in our pullback to end of trend on the highest time frame, which doesn't work out kind of perfectly, but we're holding at these supports, and then we blast off this move to the upside. So yeah, that was it. It was scary for me because my TWS, my internet interactive brokers brokerage kind of platform, got stuck or something. Usually, this thing is just like clockwork and just works beautifully. But my target was hit and I was not taken out, or seemingly, was not taken out. And panic. That's when you get on the blower, get on the hotline to close out, flatten your trade. Luckily, I restarted TWS, and it showed that I was kind of out and took my 4. But geez, it's been a while since anything like that happened to me, and it could be the slower internet connections that we've got here in Japan. Anyway, just on internet connections, just a note: if anybody's out there kind of doing urban planning or high-level economic planning for any kind of regional government, kind of regional cities and towns, whatever, put in high-speed internet. Jesus, like, it's such an easy thing. It's not expensive, surely. Give us 150 megabits per second, and the number of people that'll stay in places like this, like for 2 or 3 months at a time, so they can work and ski and wherever it might be. We've got 150 megabits per second now in Hawaii, on the north shore of Kauai, which is pretty damn remote. When you look at the map, it's a long way from anything. And we get 150 megabits per second, and it is a joy to work online, kind of away from the crowds, just with all the amenities of city living. That's all you have to do. Here we're getting 5 megabits per second. It's just, what are we, 2017? Come on. You'll stimulate economic growth in these regional towns, because people like me, people that can work remotely, will travel and stay stay for months, 2 or 3 months at a time. It'll stimulate your economy. I don't know. It seems like just a basic thing. Anyway, let's not talk about that anymore. Let us talk about the long-term chart. So this is what I was seeing a couple of days ago, this kind of clustering up here, a pullback to end of trend. We had a pullback to end of trend on the lowest time frame, on the intermediate time frame, and on the highest time frame, pullback end of trend. There's the low, the intermediate, and the high, all happening around this number up here, 2365-ish, kind of up there. So after an exhaustion buy and a bearish divergence, that was looking kind of pretty toppy. This whole move set off back in the 8th of February, beginning of this month here, where we busted up into this uptrend. So cyclical support was holding. We had strength kind of come in. That's what these red bars show. This is exhaustion buying getting the move, and it was punching us through 2300, which is a really important psychological level. So that was getting us going, and then we had exhaustion buy kind of towards the end of this move on a left shoulder here. Took a long time to play itself out into that left shoulder, but eventually it did. Whoops, I want to be doing that. And then we finally played out with pullback to end of trend on this highest time frame. So I put out a little thing a couple of days ago with this chart just showing that looked pretty toppy. Then we're going to go through a little bit of cyclical activity and maybe break into another trending move. Could be a trending move on the way down because we've exhausted ourselves, or maybe everybody's kind of still bullish and we'll kind of break into a continuation after our congestion to the upside. So there's our end of trend. Here's the consolidation kind of move on the highest time frame. Support, resistance, support. We got resistance to come in on this time frame. It's going to take a little time to kind of come in because, let me just show you that here. These two lines are quite far apart. They've got to kind of get closer and roll over like that. So at some point that'll kind of come over at some point, and that's the next kind of opportunity to set us up for either a break, continuation, more upside break, or it'll be a topping out move and we'll kind of break to the downside for a trending move on the downside. I think it's possible that we might actually do that at some point. This felt, as I said, pretty gamed up at the end of the day. We had some blue professional bars going on Thursday at these highs. We've come back into those highs kind of up here. But again, it's got some time to run. So let's see Monday into Tuesdays, activity to see how that kind of turns out and whether we can get through that resistance line when it plots on the highest time frame or not. Don't know. But bonds are looking like they're starting to take off, and so we could go through one of those phases where the money just starts flowing into bonds and out of equities kind of temporarily, and we could have like a bit of strength in the yen, so the carry trade starts to reverse as well, so the yen starts to kind of break higher and all of a sudden those carry trades look a little less attractive, and so the money gets pulled from the equities market in the US and repatriated or whatever. But this is what I'm seeing on bonds. So this is the bond oscillator that I use, and I use this on the yen as well, where we're comparing the equities market, use the ETF, the SPY, versus TLT, so long-term bonds and the equities market, and look at the momentum of the two, the difference between the two, and that's what's calculated kind of down here. We get periods where we get oversold on equities and then overbought on equities, oversold on equities, overbought on equities. And so on. We just go through these phases where the market's kind of moving between the two. What's happened recently is, we got overbought on equities here when the this is the Trump kind of move where bonds dove, equities rose. We got overbought here. We got overbought. Oversold kind of came in almost at this level kind of down here. Didn't actually trigger a red kind of oversold like back here, but we got pretty close. And now we've come back into starting to be overbought again above this level. I use on this particular chart a level of about 5 to be kind of overbought and oversold. That kind of helps you. And so it seems like it's time that we've got to just balance, kind of rebalance a little bit, kind of out of equities and into bonds. And with the activity over the last few days, it looks like we could start to see that little break back up in bonds. So this is the 30-year bond at US, which is the continuous contract on TradeStation. And so this is where we topped out. Exhaustion buy, bearish divergence kind of comes in, some end of trends up here, and we broke into this big downtrend. And this was the big day. This was the important day here. And we found support. We got a pullback to end of trend on the lowest time frame, syncing up with cyclical support on the highest time frame. So that's a place where we're starting to base. And then you can see the activity over the last 3 days. Blue professional bars come in, and then bang, we break above resistance level here. So they're buying this. Amateurs getting wrong-footed at this point here, and we could go to a little bit of a run to the upside in bonds. Now at some point resistance will come in on the intermediate time frame because we're below support on the intermediate time frame, and that'll signal a pullback kind of resistance level. So how many days this will last, who knows, but at some point just that will come in and will test back down into this kind of level again. But we could just see a little bit of a break to the upside in bonds. The system view has shown strength, weakness kind of come into here, but we're breaking above resistance here at that point there, and so we could have a little bit of a run to the upside. So as bonds kind of strengthen, that's people kind of taking profits out of equities, we could just have a little bit of a rebalancing for a while. But it didn't happen Thursday, Friday, which is kind of when it might have been expected with this kind of weakness. That cyclical support held, and as I said, Friday's activity just felt really gamed up kind of higher again, so maybe it's kind of sucking people in over the weekends, and then come Tuesday we'll kind of have a little bit of a run to the downside. But let's wait and see. Let's just see how it plays out. Don't need to forecast what's going on because I can't do that, but the signals might be kind of showing us some nice shorting opportunities around Tuesday-ish. So there we go. That's equities and bonds. Crude. Now, crude, my lord, this has just been doing nothing forever, hasn't it? I've just been waiting for this to break and break. The reason why I'm looking for this kind of break is there's our exhaustion sells, down at $40, and everybody's saying this thing's going to 12 or 16 or 20 or whatever they were saying then. Exhaustion sells here, that holds, and we've just been, testing, just ranging kind of down here between, what is that, kind of 55 and 45s and 40s and so on, just bang, bang, bang. Well, we're sitting underneath resistances. We can't press up. The systems view is just showing weakness at this point, but we've had a low risk entry point that has potentially failed. We haven't got any more breaks to the downside. If that was a good short signal, we would have broken this little supports here and here. Both those supports held. So, maybe we could get a nice little kind of break to the upside, but look at this, we've just been doing nothing. This is in the background showing, they bought, the professionals bought this, and we've kind of come into maybe, this range here at the top of those highs, but easily kind of bounced out of that. I think this is going to break higher. I think we're going to break through resistance. I think we're going to go for a run to the upside and surprise a little bit, I suppose, but it just still hasn't happened. So I'm still waiting for that to happen, but until it does, who knows. Gold and silver and platinum, they have been really interesting over the last several days because we had a pretty big bounce, and they bounced off this cyclical support that kind of came in an exhaustion sell. So let's look at the system view. So we had maxing out here, flush patterns, end of trends on the intermediate, around resistance. We break into a downtrend. This low risk entry point that kind of comes in here was a nice one. Bang. We kind of sell off here. Then we've had exhaustion, sell, bullish divergence come in. Cyclical support in the highest level holds. It didn't make nice little pullback to end of trends on the lowest or the intermediate. Just broke above resistance, and so we've had this kind of strength that's coming over the last couple of weeks. And I don't know. I really don't know which way gold is going, because this was kind of selling it down. We had no blue professional bars kind of down here at the lows. We had amateurs instead, and we've come back into the zone, into this kind of sell-off zone in the middle of it, where they were selling it down at this point. So I'm not sure which way it's going to go. We've still got to go cyclical energy on the downside here, but gold, it's not clear to me as to that's really a valid upside breakup. I think we still got to get rid of some energy to the downside. Same picture for silver. It's been lurching down with these really scary blue professional down bars. Again, amateurs down at the bottom, and the professionals have come back in, and we've broken above the highs of that in this kind of zone where the professionals were selling it down at that point. So for me, jury's out. That is not a classic kind of jump in buy silver kind of signal by any means, but we have got strength there. On the other hand, platinum does look better. Left shoulder here, pullback to end of trends, coming with exhaustion, sell, bullish divergence. We start to break into an uptrend. We have a nice little trending move to the upside, and we go pullback to end of trend on the highest time frame there. Bang, bang, and then we come in with pullback to end of trends on the lowest time frame, syncing up with that end of trend on the highest time frame. Exhaustion, sell, bullish divergence, all good stuff, and then we start to break into an uptrend. So platinum looks to me like a far more classic bottoming pattern. We bottomed here, kind of 850s or whatever that level is, go for a little bit of an early rally, and then we test back in to those lows. 890 holds, and we're starting to break into an uptrend. So platinum is breaking into a nice little pattern. And so that would say precious metals are kind of strong. But silver just doesn't look right to me, and gold doesn't look right to me. So I don't know. I think we're still going to come back down to test this level a little bit more. But I could be wrong. It's like, maybe there's so much strength in, people are anxious to get into gold and silver. I don't know. Certainly, they're buying Bitcoin, which I'm very happy about. So that's kind of up strongly at the moment. Okay, so there we go. Those are the charts I am looking at this weekend, and looking forward to next week's trading.